The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 21st marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, a daily investment newsletter service that is the intelligence for creating your financial freedom. Folks, hope everybody out there had a fantastic weekend. I know I did. It is terrific to be back with you. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. These are the ones I call the 9 rules of the universe, because the universe says to you and I on a consistent basis, number 1, if you don't move, I won't move. Or said another way, if you sow, you can reap. But we first must sow. Number 2, unless we change what we are, we will always have what we've got. That is most certainly something to think about. And true rule number 3, the way you do anything is the way you do everything. Folks, number 4, leaders are readers. The question is, what book did you last read? And when did you last read your last book out there? It's not what the books cost. It's what it will cost if you don't read them. Number 5, don't say if I could, I would. Say if I can, I will. Number 6, wherever you are, be there on your way to work this morning. Concentrate on work, not on home. And then on the way home, concentrate on home, not on the work. Number 7, don't set your goals low. If you don't need much, guess what? You won't become much. Number 8, happiness is not something you postpone for the future. It's something you design for the present, right here, right now. And number 9, time. That's our most valuable asset yet. We tend to waste it, kill it, and spend it rather than invest it. Thank you for investing your time with me. Respect the rules of the universe, because they will respect you. Let's go check out the markets. Is there any respect out there for the bulls? Right now, Dow is up 47 points. It trading out at 16,455. S&P up 5 points. Trading out at 1870. Composite up 16 points at 4111. Russell 2000 up 4 points. Trading out at 1141 out here. Sarepta Therapeutics is on fire this morning. Up $11 and change. That's up 46%. Priceline jumping in on the fray. Up $11 as well, but that's only 0.9%. We've got to the downside, Athena Health off $7. That's off about 5 cents. Chipotle Mexican Grill, they're down 0.9% off $4 and change. Google off $4. VIP Shop Holdings, VIPS down $3, 2%. Atlas Energy down $3, about 7%. Lululemon off nearly 5% this morning, down $2.50. Our calling number is 877-927. 6648. Had a request to go take a look at a stock chart out here. Let's begin our day by taking inside our Tiger's Den. And folks, if you had a chance to test out the Tiger's Den, I really suggest that you do that. You know, if you're trying to pick up your game a little bit, move to the next level, it's really all about surrounding yourself with a peer group. No better group of folks and traders other than the folks that are inside our Tiger's Den. So go check that out. We're going to take a look at RDC as the ticker symbol. Company is called Rowan Companies, PLC. Rowan Companies, they provide offshore oil and gas contract drilling services. They company own and operate 30 self-elevating mobile offshore jack-up drilling units and ultra-deep water drill ships out here. Right now, it is trading out at $30.74, and the question is, can I take a look at it? Because this investor is looking for a medium to long-term hold. Well, we know what that means. That means we need to not so much focus on the daily charts out here, but take a look at the weekly charts. So let's switch a weekly and monthly chart. First, I'm going to go ahead and we're going to take a look at the Rhodes Momentum Indicator charts. Now, I'm going to put those up on my screen first. So we're going to take a look at the weekly and the daily out here. I've got that split in two. If you're watching us on Tiger TV, the upper portion of the screen, the half upper portion, that is the weekly chart out here. So it's nice because I can get a perspective of both the weekly and the daily at the same time. Right now, RDC, Rowan companies out there, and the weekly chart, it's in the sell mode out here. So we've seen no type of sign, no significant sign here of any reason to jump in on this here just yet. No reversal signal on the weekly chart. In the daily chart, we have not really seen much. Oops, didn't mean to pull it all the way back that far. I meant to just stretch it out a bit here. On the daily chart out here, it still is showing some significant resistance. This would need to get above at least a price level on a daily chart of 31.15 before one would even consider taking or building a position. In this case here, that will become resistance if it cannot get above that, and would set up that sellers are really in control of this. They have been ever since. Let me get my crosshair. It makes it a whole lot easier to take a look at. Ever since the little bearish engulfing candle on April the 2nd out here. So where we've seen the market bouncing, we've seen the energy sector, the XLE, absolutely on fire. In fact, if I take a look at what's the XLE doing here this morning, the energy sector is up 69 cents, up 0.7%. So the energy sector has been leading the charge off of the bottom out here. And not that Rowan Company is necessarily a part of that sector out here. That I don't see on my screen here. What I can say is they are totally lagging the entire energy sector, because that has really been up off of the bottom that we have recently seen out here. April 15th, and this has just not participated that much. Now I'm going to switch to a different daily chart, then we'll switch over to a monthly chart on it. Just want to see what type of signals we're getting, so let me just do that. I know that doesn't answer the question, hey, where is it that you get in? Well, of course, where you're going to get in, where I'm going to suggest that you get in, is when you see the market actually reverse. We'll take a look at potential targeted areas here, but RDC, I'm going to put this on a daily chart. What I was looking for was a price relative strength divergent pattern, see if it could form, because those oftentimes make very nice lows. As an example, this made a low back here on February 3rd, 2014 out here. We saw that this got a little bit of a bounce out here, but that was a opportunity to take a look at a potential long trade. Of course, you would use stops no matter whether it's long-term, short-term, intermediate term. You always use stops on your trades out there. But as we take a look at the daily chart out here, it's not giving us any kind of signal, any such signal at this point here of a price relative strength divergent pattern. Let's take a look at a monthly chart out here. See with the monthly chart, this shows us that we're in sell mode, buying mode, what kind of mode that we are in out here. So this here on a monthly chart, so this month I should say, that is not a good sign. And what am I referring to? Well, we're referring to a hammer candle. So for the month of March out here, this formed a little hammer candle. Hammer candle says you're hammering out a low out here. That low is on the for last month. That price is 31.27. Right now you're trading at 30.76. So that is not a good sign out there, because if you close below a hammer on a monthly basis, if you're long, you are wrong out there. Now, where is support, potential support? You would take a look at where are the bulls next present, and that would have to be at this little piercing candle back in October of 2011 out here. That price level is $28.13. So if you close below that hammer candle, Russ in the den, I would have to say you'd start looking at about 28.13 to see if that level gets tested, if it gets rejected out here, but that is not a good thing. If we take a look at them, I'll switch back to this chart out here. This is the daily chart, and so I'm using a couple of different signals out here. So 28.13, one of the things I wanted to pull open was this high volume bar. See what the price was on this high volume bar out here. That takes us back into June of 2010. That low is 21.66. The high is 25.28 out there. You know, the other thing is with that potential hammer candle breaking to the downside out here, it's very possible that price could try to make its way all the way back to that 25 to 21.66 level. So at this stage here, I'm not seeing anything on the stock charts that would suggest that this becomes a buy out here, and that is on Rowan Companies. Hopefully that is helpful to you out there. In any event, let's continue to motor on. I did mention the XLE, so I might as well pull up the XLE on my screen out here, because this has been on fire. The XLE up trading out at 93.38. Now, this is truly up over its talk about a move higher. Let's see. This may have a confirmed A to B equals CD up. The B point on this, or the swing point, was April the 4th. 14 million shares, which was taken out with a gap up with only 13 million shares. That's still not too bad. 18 million shares on Thursday. We're giving that the gold star treatment. That's a confirmed A to B equals CD to the upside. So where does that say the energy sector may want to head to? We'll take a look at the small and the large A to B equals CD to the upside here. But so unlike Rowan and Company versus this sector here, the small A to B equals CD says 93.58. It's already hit 93.49, but it's a strong move off that C to D the C to D leg out here, 95.02 at a minimum. The larger pattern, let me just change colors on these. The larger pattern out here, which is the blue one, that says 97.94. 97.74 is where the energy sector wants to head to. Man, this thing is on fire, and that says it's coming all the way back here. Let's to the 2008 highs at. It's already above that, $90.30. That's interesting. Let's put this on a longer-term perspective out here. Interesting. Very interesting, Schultze would say out here. Let's go ahead and get rid of all this out here. So as we take a look, here's resistance. Old resistance becomes new support. Man, how about this? Even with all of the oil that's being produced here in the States and Texas, over in the Midwest out here, the energy sector is absolutely on fire. It is now up above its 2008 swing point high, which was $91.42. Resistance here really is at the top of that level. That says 91.42. If this is a real break, we ought to see that level hold. Again, it's trading at 93.37. The B point of an A to B equals CD to the upside. Little doji in Stevie's window out here. Let's see, that high was 80.90. 80.97. It's from the trading session of March 31st. 413 million shares. As price got above that with quite a bit less volume, only half the volume, 202 million shares. We've never seen, it has not seen volume like that. Nonetheless, it is up and over that. The longer term, the tiger butterfly that could be forming out here inside of the energy sector would take it to 97.74. So that's where price is headed to. That's your A to B equals CD to the upside here off of the lows from 2009, and that was on the energy sector. In the meantime, let's go check out the rest of the markets and see what they're doing here. You've got the Dow's up 42, S&P up 4, NASDAQ up 3. Let's start off by taking a look at the indexes. Where are they headed to? Well, let's take a look at the NASDAQ composite. This is going to be the key to the entire move up here right now today. It's trading basically flat from the standpoint candle-wise, trading out at 41.04. If we take a look at a number of different retracement levels inside the composite, let's just take a look at the most recent swing point high to low. That's from April the 9th. The high of 41.85 down to the low that was put in here on April 15th. You can see it still is above the 0.618 retracement level, which is at 4,093 and change. Does look like 41.34 is in the cards, and maybe even 41.85. Right now, Dow's up 35, S&P up 3.5. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And as Cub in the Den pointed out to us, Platinum this morning here just getting walloped to the downside. It's up $23, down 1 6/10% right now. Goldilocks back $6. Silver down 23 cents, trading out at 19.36. Light sweet crude is up a quarter. It's trading out at 104.55. Just before we went to break, we were taking a look at the NASDAQ, the composite index out here. What I've done is I've thrown up on my screen here. We covered this during the first hour, just in case you didn't join us. To me, this is really the chart du jour. This is the chart for us to be paying attention to today because, the NASDAQ has let us down, or has led the market down. Really did no damage to the S&P 500, did no damage to the Dow out there, but it did take along with it 2,000 of its friends from the Russell 2000. So it was an RSVP that I didn't take. I didn't get the invitation to that party, but we did play the party to the upside once the move to the downside was done and completed its patterns out there. Right now, what I'm watching for is the NASDAQ on this descending price channel to see if, in fact, it can break out of it. If it breaks out of it, we'll see our markets move higher. Now, in the case of the NASDAQ, on the 120-minute chart, it will go ahead and make a 100% move of a move out here, take it back into the level of about 35.99 out here. But it's struggling to do so. It's putting up a fight. We'll find out who's going to win this battle. But if it can't break this descending price channel, well, guess what? Prices will head south. The NASDAQ will likely go ahead and take all of its friends, and this time it may, in fact, invite the S&P 500 and the Dow to join in on that party, because if it can't bust them up, it'll try and bust them down. That means a revisit of the bottom of the price channel out here. Right now, no real reversal signal yet. We know where the battle is being formed and being fought, and so we will continue to pay attention to that really throughout the day. Certainly I'll do that with you for the next 34 minutes out here. I did mention platinum and gold. Let's go take a look, and silver. Let's go see what's going on inside each of those complexes here. Now, I have not taken a look at platinum. We'll do that here momentarily. If we take a look at gold, trading out at 1285.40. This is the 120-minute chart out here. This is when gold fell off of the mountain that was back on April the 15th on the 120-minute chart. High volume low. That is, let me see, I guess it's not been tested here just yet. Should be tested. Let me just refresh my screen here, make sure I've got all active data. I thought that it was tested, but it could be. It looks like it was tested. Let me just draw the line across the bottom of the screen out here. So you had a nice high volume low that was untested. Price could not get above the high of that candle session. Now as we take a look at the low, it was absolutely tested out here. We'll put that in red. That low, by the way, is 1284.40. That level was tested and rejected. It broke through. It closed below at 8 o'clock this morning on the 2-hour chart at 10 o'clock. It's rejected that area, but no bullish reversal sign just yet. If we take a look at a little longer-term chart here for Goldilocks, what do we have setting up? Gold right now trading into the swing point here on a daily chart from April the 1st. The top of that is 1288.40. You're trading at 1286.30. That says the bottom of it gets tested, 1277. If we see it close below that, with volume meaning more than 133,000 contracts, that'll confirm an A to B equals C to the downside. That would take Goldilocks all the way back to its December 31st low it'll take it back into the candle from December the 31st out here. That's somewhere right around the price level 1181.40 to 1214. But first, we need to see gold break 1277 before that were to take place. Let's take a look at platinum. Let's go see. I've not looked at a platinum chart for quite some time. We'll put up the continuous contract here, see what it is doing. Right now, trading down $22.80 out at 1405.90. Let me do this. Let's go ahead and clean up the chart out here, see what it is doing. So it's also trading in, just like gold, it's trading into its swing point, in this case here from March 27th. Now this has more of a consolidating pattern than it does anything else out here. Nonetheless, right now trading into the March 27th area. The low there is 1394.30. Show about 20,000 contracts on the continuous contract this morning here, trading into it with light volume out there, and has not tested that low. If it does take out that low, you'll see an A to B equals CD to the downside. That would form what actually looks to me like set up a potential Gartley buy pattern. That Gartley buy pattern coming off of the swing point low from December 19th out here. That low is 1311. If we take a look at the retracement from the low to the high, you'll see that 0.618 Gartley buy pattern. She would look just like about this, right around at the 1379-ish level, maybe a tad lower than that, maybe get all the way down into about the 1361, 1387-ish range. Right now, the Dow's up 24, S&P's up 2, Russell 2000 back 45 cents. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released.
The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is off. Is up 20 points right now. S&P is up a 1.5 points. If I go back to that platinum chart for you, I'll give you the actual potential Gartley buy pattern. So remind me in the not too distant future if we don't take a look at this. But right at about the 1373 level, what you've got forming there, potentially forming there, you'd have a 0.618 retracement off of its swing point low that was formed on December 19th. The price level was 1311. Made a run all the way up into a high on March the 5th, gets up to 1489. So from that low to that high, your 0.618 retracement is right around that 1373 level. If we take a look at our B2C swing point, if we take a look at the expansion of the B2C swing point, the 1.272 expansion, the first expansion that you'd see, your 1.272 comes in at that 1373 level as well. So you'd have beautiful Fibonacci numbers. You've got a 0.618 retracement at the lows, a 0.786 retracement at the highs. That's the B2C retracement of that A to B leg out there. And you'd have a 1.272 expansion. So what you would also have at 1373 is a swing point from February 4th out there. Now, that swing point low happens to be 1361. Volume there, not it's not a heavily traded contract. 8,700 contracts out there, and that would potentially set up a nice little buy, a Gartley buy, especially if you get a reversal after it hits that price target area. So that's what's going on inside of platinum. If we take a look at silver here, high-ho silver. Silver right now trading out at 1936, wants to make a run for at least the bottom of the consolidation area. That's at 1897. More likely wants to get to the December 31st swing point, and that's at about 1872. And on the earlier show this morning, we made the case that it's forming an A to B equal. That's a failed 0.786 Gartley buy pattern. And when those things fail, they turn into butterflies. Those butterflies would take you all the way back into the key reversal session from June 28th out there, the low of $18.18. So when we were talking during that first segment, we were saying here's where the battle is going to form, and that is here inside the NASDAQ 120-minute chart out here. So right now we've got the Bears are doing everything they can to exert their force and their energy. It is easy to have identified where that fight is going to take place out here. We'll see this chart here does not this 120-minute time frame. This really just began at 10 o'clock, so this time frame here is not over till 12 noon. But what we do know is that the Bears have been able to defend that descending price channel. If they really get things going, and then what you would see is likely a move down to the bottom of the descending price channel. If you take a look at retracement levels from low to high out here, your dead cat bounce, just a normal move this morning, would take it at 34.92. There would be nothing wrong with that. Right now it's trading at 35.49, 35.19 out here. So that is what another about another 27 points to the downside that you could easily see here. Inside of the NASDAQ futures. Let's go take a look at the some of the other indexes, see what they are doing. Let's take a look at the ETF structures. Let's go see what we have going on out here. Let's take a look at let's start off by taking a look at the Qs. Let's pull that up on our screen here. If we look at the Qs, so far they've only been able to make, I got a number of different things up here. Let's clean the chart up a bit. That way you can follow along, see what we've got here. So the Qs here, if we just simply take a look at now what the Qs did, on the trading session of April the 15th, they formed a key there. That is important. That says that and they had follow through on that very next trading session. Now, what the Qs have also done is this. If you take a look at from the most recent swing point high, April the 9th, down to the low of that key reversal session, April 15th, the Qs are slightly above the 0.382 retracement level. They're trading at that level right now. 86.12, 86.05 is what they are currently trading at. If they can reverse today's course of action, they ought to make a move all the way up to about the 87-ish range. That is where you would find some really stiff resistance out here. That happens to be the top of the daily descending price channels. You got different price channels out here using different time frames because we're using opens and closes of those bars out here. So if in fact the Qs can reverse course today, 86.89 is the target to the upside to the and then beyond that would be the top of that descending price channel in the 87-ish area. If in fact they are unable to turn things around, well, then in the case of the Qs, this could be forming an A to B equals C to the upside unless they get volume cooking to the downside. First stop inside the Qs, 85.41. That's your dead cat bounce off of this move from the bottom. And 84.60 is your 0.618 retracement level. And those would be the targets to the downside. Let's go take a look at the SPY. Let's go see what the SPY is doing here this morning. It is trading out at 186.22. Off of its move out here. It did not have a key reversal session, but off of its move, where from the high of April the 4th out at 189.70 down to the low after it completed a 1-to-1 A to B equals C to that low, taking place on April 14th out at 181.44. It's made the 0.618 retracement level. Did that on Thursday. It did it again today, a slightly higher high. 186.50 is the number. It's trading at 186.29. It looks like, and it had pretty decent volume on a holiday Thursday. There was 105 million shares. Of course, that is nothing compared to the volume on the downdraft session of 172 million shares from April the 10th. If it can get above 187.17, that really suggests to me that 189.70 would be the number. The key to be watching for in the SPY today is likely going to be the low of that swing point from April 4th, 186.10. If it rejects that, it likely will be on lighter volume. That would be a rejection of a swing point on price and volume. If that level holds, 186.10, so long as the SPY closes inside that, guess what? It says it wants to go up and test the highs, not just 187.90, which is the 0.786 level, but would want to go test the 189.70 level. The SPYs here will not begin to break down until they break below this little price channel line that takes you all the way back to November of 2012. So that first move down that we saw inside the NASDAQ, no real damage inside of the S&P 500, no real damage inside of the SPY. Let's go take a look at the IWM. Let's go see what this is doing here this morning. The IWM, let's go ahead and get rid of that little Gertley pattern. What did they do out here? No key reversal session, but the IWM did test a swing point and rejected it on price, not on volume. That was the February 5th swing point low, the top of which was 109.15 and had volume of 61 million shares. The IWM came down there with 76 million shares, so came down with volume. Does suggest at some point in time that level will be tested from the high to the low. The high being March the 14th, 120.58 to the low. That's the low that came in here recently on April the 15th out at 108.66. The dead cat bounce was achieved on last Thursday. Also again achieved here this morning. 113.21 was the number. We've seen this trade up to as high as 113.53 here today. If, in fact, we don't see a rejection of price, we're likely to see a price move up to about the 116 level. That is your 0.618 retracement area. Of course, this will also struggle as it gets to about the price point of 115.11. 75 million shares to the downside on that candle session. So you'd have to say a targeted upside price becomes 115.11 to 116.03. as we speak right now. If we take a look and finish this off by looking at the Dow, diamonds out here. Lucy in the sky with diamonds. The Dow still trading into the swing point from April 4th. That's the key number to be watching. That area is 163.58. 10 million shares. So the diamonds have gotten in there with light volume. It's about 6 million shares on April 16th. On Thursday, 5.7 million shares, still not too bad volume-wise to the upside. The diamond's doing pretty good considering the demolition that took place inside of IBM on Thursday. In fact, let's switch over. Let's go take a look at some of those core holdings. Let's go see how they are holding up here this morning. Hey, how about IBM? In the case of IBM, we showed IBM had a nice sign of strength out here. That took place on the trading session of March 25th out here. Was up with 10 million shares out there. Thursday's session was down with 11 million shares. It closed back above that level. So not being able to bust it down. Very interesting out here inside of IBM. It's trading higher. It's trading out of 192 right now. IBM is not the number one weighting inside of the Dow. At least I don't believe it. I think Visa has now taken over the number one weighting structure, but I have to go back and take a look. So around number one, number two out there in the case of IBM, but has not been able to bust it to the downside, even though we did have some pretty good volume on Thursday. At a minimum, we ought to see the gap here tested. That's the high, or that's the low of April 16th out at 195. Looks to me that's where IBM wants to trade to. Speaking of Visa, V being the ticker symbol here, this had completed a 1 to 1.618. A to B equals CD. To the upside, or to the downside out here, the actual price projection would have been 193.71. What it did was it actually got down to the low of 194.84. What was that doing? That was coming into this big old high volume bar from July 31st, 2013. That high was 194.90, 22 million shares. Came down, tested that area, rejected that area. Now we are seeing the bounce. We take a look at the bounces. We take a look at this pattern out here. I'll just get rid of that too. Let's just take a look at in fact, what it probably did was it formed a Gertley buy pattern, did it not? Off of the low from that same trading session from July in 2013. So there is your Gertley buy, your 0.618 Gertley buy. You can see it had a expansion of just a greater than 1.618, and what it did was it had a reversal candle right here. The trading session of April the 14th out there, that is a bull separating line candle signal. That is bullish. They don't get any more bullish than that inside of two-day reversal candles here. Well, I guess they can get a little bit more, but out of your 5 different reversal signals out there, that is numero uno when you take a look at bullish reversal signals. Now, volume-wise, nothing here to blow our skirts up. Because it has been moving higher on light volume. You can take a look at this here. If we just draw a line on the volume line here on my chart, you can see, all through last week as it was making that move higher, it was doing it on lighter volume. Nonetheless, you did get a nice bullish reversal signal. If we go from high to low, that first level was achieved on Thursday. That is your dead cat bounce. That's a 0.382 retracement, and that is at 210.37. An inside day today, not providing us with much in the way of information out here. If it can close above 210.37, Visa ought to trade up to about the 219 area. Of course, it's going to need to get above, let's see here. It's really already above that high volume bar here to the downside. So the next thing to contend with, you'd have to say, would really be this swing point at April Fool's Day, April 1st, out about the 218. Hey, if it can hit 218.16, it might as well go tag 219 and change out there. So Visa looks pretty good. So IBM rejecting its lows. Visa off of has a confirmed Gartley buy pattern that is in place out here. Clearly, the two top weighting structures inside of the Dow. So you've got the fight going on between the Dow and the NASDAQ out there. And we know what the line in the sand is in between the NASDAQ. So who's going to be the referee inside this market? Well, I'd have to say the referee goes to the euro Japanese yen. So let's go check in on that currency pair. Let's go see what she is doing here in the marketplace as we speak right now. The euro Japanese yen trading out at 141.63, up above the world so high. That means the 0.382 retracement, which is 141.36. It's trading at 141.63. The euro Japanese yen wants to make a move to 142.69. That's your 0.618 retracement level. The euro Japanese yen is saying, hey, you bears, you are neglecting me. I'm the rule maker out here, and I'm the one who's in charge, and that's the euro Japanese yen. Looks to me like it actually wants higher price, and that ought to lift all boats higher out there. If we take a look at even the short-term chart, let me see what the 120-minute chart time frame is showing us out here. A little key reversal session as we speak right now inside of that 120-minute chart on the NASDAQ. But, of course, that session does not end until 12 noon, not until Basil Chapman is done with his show out there. If we look at the euro Japanese yen, it's pushing just a tad lower out here on the 120-minute time frame. Of course, daily rules the 120-minute chart. This euro Japanese yen came with conviction on April 16th off of its descending price channel out here, so it's just kind of a little bit of a sideways move at the moment, working off a little bit of an overbought condition. Let's check in on light sweet crude. Let's go see what it is doing. It's up 13 cents, so not a lot of movement out here. What light sweet crude here has done, though, it's gotten above. It's finally now gotten above the trading session from March 3rd, 104.12. It does look like more potential. That high wave candle out here where it lost its way on April 16th, guess what? Looks like it found its way on April 17th. And what does that mean? Found its way to where? Looks like it's finding its way to 106.50-ish out there where it could form a 1.272 butterfly sell. Doesn't become a sell until we get a reversal signal out here. Right now, relatively flat market out here. Dow's up 13, S&P is up 50 cents. NASDAQ, the lead dog to the downside, only down 0.1% off 5 points. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Masters Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Real flat market out here as we speak right now. Now, over the holiday weekend, gave me a chance to catch up on some old articles that had just been sitting off to the side, didn't get a chance to read. I mentioned this during the first hour of the Open because I found it so unusual. It was a study. It was contained within another article that I was reading, but it was a study that was conducted by Harris. It was on behalf of one of the financial institutions out there, and the study showed Well, it showed a number of different things. Number one, it showed that people were more afraid to invest in the stock market than they were in dying. I found that kind of unusual. But then as I read the article even further, it showed that 2/3 of Americans fail to use financial advisors out there. So I had to kind of ponder that. And because, my knowledge, what I've done for the last 25 years is, first understand why it is that we do the things that we do. Because to me, that's one of the most important things that you can understand as far as being a trader and investor. This is a game about psychology. And when I was a kid in high school and so forth, I hated psychology classes. I shunned them. I was like, but then I realized just how important psychology is. In fact, when it comes to trading, the expression 80% of trading is psychological and the other 20% is in your head. Right, between your ears. It's 100% psychological out there with regard to what markets are doing. It's why you want to master different patterns out here. Well, what was so interesting about this article was that it said that 67% of folks don't use coaches. Now, what I have learned is that what millionaires and billionaires do is they use exclusively, and whether it's professional athletes, whether it's financial, whoever it is, successful business owners, CEOs, they all use coaches and advisors. That's why they call them boards of directors. They all invest in advisors out there. They surround them. The most successful people always surround themselves with advisors out there. Now, whether you call them newsletter writers, whatever it might be, it's always a matter of it's putting things in perspective. Until we link the known to the unknown, it becomes very difficult for us to be able to link two things together. So the easiest thing for me to do was I just use as an example my newsletter service, Mastering Probability. Now, somebody might take a look at it and say, hey, that's $149 a week out there. Well, we got this great Tiger Dollar promotion that's going on. It doesn't have to be $149 a week, and I think that's the wrong way to take a look at it. If you take a look at what it is that you spend on a gallon of gas, now you've got to get somewhere, or money that you spend, today you're going to throw away more than $3 worth of food throughout one of your meals out there, or somehow you're going to go ahead and buy something that you don't absolutely need. Maybe it's a big old chocolate candy bar, but whatever it is, look, the reality is you want to always find people that have been successful and copy what they do. And so when I saw that, when I found that most people are not using advisors out there, look, my newsletter, just as an example, whether you use and I did a workshop back on December 18th. Many of you participated in that workshop. I unveiled the entire set of the Rhodes Momentum Indicator strategy out there, which we have been using exclusively for trading since that time frame. I really have been using exclusively for trading since August the 8th out there. Whether we go to August the 8th or December 18th out here of 2013, on a daily basis, if you take a look at all the trades that we've done, it's produced on a $100,000 account. It's produced anywhere between, $85 and $95 a day versus $3 a day for the cost of the newsletter service. And look, it's not, whether it's my newsletter, it's Basil's, whether it's Tom's, David White's, or what have you, really make sure that you're doing the things that successful people do, those millionaires and billionaires out there. Invest in yourself, folks. You can, you don't say, if I could, I would, I should. If you can, you must. And that's really the way that you should be taking a look at it. So give Mastering Probability a try out there. Everything is documented, every single trade out there. It is a win-win proposition. Of course, the next win-win proposition, that's coming up next. It's our man Basil Chapman. It is Marvelous Monday. We might have Larry Pesavento with us. I'm not sure if we do. If not, maybe Basil will do his hour. And then we've got... Basil is going to do his hour as well, so we got another 2-hour round with Basil. Then we've got Daryl Martin, David White, the Tom O'Brien Show from 4 to 6. Have a great Monday, folks. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.